Boy, so today we're going to be discussing how to trade the London continuation setup, right? So this is just a sequel to the video that I made prior to this one on how to trade the London session. That one was mainly talking about how to engage the London reversal. So you're looking at an instance where London runs the, if you're bearish on the day, London runs the Asia buy side liquidity or the previous day's buy side liquidity, and then it drops lower, but you're not waiting for the displacement to trade in the you're not waiting for the London displacement to be able to catch the pullback continuation, right? You're just going in off the catching the high of the day or the low of the day, depending on your bias, right? So this video is going to be talking about how to catch the pullback, because some people might not be very much interested in calling the top of the market in a bearish market, which is something that you should want to get comfortable doing, is selling tops in bearish markets and then buying bottoms in bullish markets, right? You don't want to go and sell they top in bullish market, because the market will just keep continuing high and breaking through bullish swing points, right, and just continue expanding, and you don't want to be involved or be caught in that sort of situation. But when a bearish market, you should be very, very comfortable in selling after you see that the price might, especially when you're watching from the midnight opening and you see price rally up above, taking out buy side liquidity and then forming a swing point. Granted that it's traded into a sort of PD array, so a fair value gap, a order block, a breaker block, whatever it is, you should be very much comfortable in selling the market at that point, expecting that we're not going to see price trade higher, right? And the same thing is flipped to the opposite when you are in a bullish market, right? So yeah, so basically looking at the schematics here, you can see that this is what it looks like. We're going to go into the candlesticks later. Price opens at the midnight, right? So midnight would be any point from here, right? Midnight will be any point from here. Price opens and it runs the buy side liquidity of the Asian session, and you're not really much interested in seeing where this swing trades to, right? Because you're not trying to catch the top of the market. You're going to be waiting after that happens. You're waiting on whatever time frame you're looking at. You're waiting for that drop lower, right? Once this happens, then you're going to be looking at inside of this price leg, is there a inefficiency? That's the telltale sign that, you know, price wants to continue selling higher. So once you identify the inefficiency, that's where you want to be selling. But there's many times the inefficiency might be happening too deep inside of a discount within that price leg. So in order to not complicate things, because it's like, well, do I want to sell at the inefficiency? Do I want to sell at the order block? Do I want to sell at the breaker block? Do I want to sell at the rejection block? I just cut everything. I just skip through all those, you know, conundrums, and then I just use the optimal trade entry, because that gives you everything you need. Because there's many times that I'll be trying to catch the continuation, and then I'll look back and say, well, if I was trying to sell at the fair value gap, that was maybe, if say for example a fair value gap was presented at this area, right, and you were looking to sell, you might sell in here and price has a very deep, and there's many times I'll see it has a very deep pullback to maybe the rejection block, right, and you were selling here and you went short the market, right? Your stop loss is going to have to be to accommodate the entire pullback. Granted, it does not take out this high, because you're thinking that this high is not going to be violated. It's going to be the high of the day, right? So you're going to put your stop in a position where this high has to accommodate this entire expansion, right? And if you're looking at that and you're looking at some form of sell side liquidity, maybe the previous day's low, some external range low, the Asian range low, whatever it is, market equilibrium, some fair value gap point, right? That is not a very, you know, pleasant risk to reward. It's less than a 1R, right? Now you can take this trade, you know, it's no problem, but you want to be engaging in trades that can help you maximize your reward and reduce your risk. You understand? So if you were waiting for the optimal trade entry, which maybe sometimes you might miss it, sometimes you might not, but far and large, you're going to see that price would have the retraction to the optimal trade entry, right? And then you're going to be trying to sell it off the 62% or the 0.7%, or the 0.79%. So these are the three main levels for me that I like to time that entry point. So a lot of the times we trade to the 62, it will not even get to the 0.7 or 0.79. It just trades to the 62 and then it just leaps to the downside, right? So that's what you want to be buying, and that saves you the headache. Now it might invert the imbalance, and a lot of people look at that and say, oh well, we are inverting the imbalance, but we have a rejection block. You know, we might have a breaker block, we might have a order block deep in here that price might be wanting to come for. And the people who are pattern traders, and they'll see that price inverts the fair value gap in here, they'll be trying to buy this. Let me take this off. They'll be trying to buy this off a short, of a long. They'll say price has inverted the imbalance here, and they'll try to buy it, and price slumps all the way down, stop them out, and goes for the target. That's why you cannot pattern trade. You have to understand the narrative. You have to know the buyers for the day. Is price bearish or bullish, right? Once that happens, when you see price inverting the imbalance, you know that it's probably trading in for a deeper premium array, granted the rejection block or the order block or the breaker block for the continuation sells lower, right? So you want to be very aware of all these possible scenarios. The same thing could be said for bearish. I'm not going to spend too much time, as we've explained a lot with the bearish example. So if you're bullish here, it's the same thing, waiting for a run on liquidity, waiting for price to displace, creating, you want to see that imbalance, right? The imbalance is what tells you that the order block in here is an order block, right? If I see price balances itself, so as it's displacing, it's offering sell side, as it's displacing bullishly, it's offering sell side and closing in all of the possible inefficiencies, right? Once that happens and I see that expansion, I'm not so confident in this retracement because price has efficiently delivered in through this expansion. So if it's retracing down here, more than likely it's not bearish, it's not bullish, it's trading down because it wants to see lower pricing and continue lower, right? So once you see the imbalances created in here, that's how you know that price is wanting to trade back to the inefficiency. That's if you are bullish on the day. If you're bearish on the day, then you're not going to be looking for this, right? You're going to be looking for a sell. You're going to look for something like this one here, right? So yeah, you're going to be waiting for that displacement, retracement, buying the pullback, right? And then riding it for the, maybe it's an Asia range sells buy side liquidity. Let me rename this. My apologies. So maybe that's the Asia buy side liquidity, or it could be the previous days buy side liquidity, or it could be some external buy side liquidity from the last 3 days. Because if you would remember from the video on how to trade the London session, I told you that you must be annotating the highs and lows of the last 3 days. So you're defining the daily cycles from the midnight opening. You're not using the 5 o'clock open, but you're using the midnight in New York, right? So you're going to be looking by the last 3 days. This day you're looking at, you don't count it, but you look at Monday, Tuesday, So for example, today is Thursday. The last 3 days will be Wednesday, Tuesday, and Monday, right? So that sort of, idea, right? So you want, that would be any sort of external buy side liquidity resting in that, within that range. So price, would you be expecting price runs that liquidity, right? So this is the schematics of it. So you want to take note of it. Now we're going to go into the candlesticks, because like I said, this stuff is easy. Drawings are easy, but applying it with the candlesticks, that's where the real money is made, right? So let's go into the candlesticks now. All right, boys. So we have for the first example over here, you can see from the opening, price opens, runs the previous day's buy side liquidity, which is also the Asia buy side liquidity. And we see the displacement leaving behind this fair value gap. Price returns to the fair value gap, still inside of the London session. This is why I don't always like to trade this strategy in the New York, because as many times in the London session, you could have the sell-off, and then the New York could be whatever, right? So you can see the price opens, trades up into the imbalance, and the sell-off happens, and we exited price at this price point here. Why were we not looking for this low here? Well, it's because that this low is trading into the imbalance here. So this run into this imbalance has indicated that price was bullish. Price is respecting this as support for higher pricing. So even though we are bearish and we're looking for sells, I'm not demanding that price is going to trade through this point, because this is an intermediate term low. Price has not shown any indication that it wants to violate this point. So we're going to leave it at this point here, right? Why did we trade this one? Why didn't we look at this one to as an intermediate term low? Well, because it's inside of the Asian range. It's inside of that range where there's a liquidity buildup, seeing as we're trading the euro and the pound. So that's why I was looking for a trade through that point, right? So I wasn't looking at this because it's an intermediate term low, but I took this because it was inside of the Asian session, right? So very important that you understand that, right? All right, boys, for this next example, you can see how price runs the Asia sell side liquidity as well as the previous day sell side liquidity, and we get this displacement inside of the London session. The low being formed in London, we get the optimal trade entry over here inside of the New York session, and price runs for the target, right? So this is one of the reasons why I tell you that you do not want to just be buying off the fair value gap, right? Because you can see the fair value gap presented right here. If you were trying to take this long, you'd have to buy over here, and then your stop would have to be in a position where it can accommodate this a pullback all the way down to the rejection block, very close to the low, right? But not taking out this low, right? So your stop would have to, your take profit is this wing high, which is the Asia buy side liquidity, which is just a 1.3 risk to reward. Now, this is not bad, but if you like to maximize your reward and reduce your risk, you can wait for the optimal trade entry, because that OTE gives you as closest to the cheapest price that pullback is going to give you, right? So you can see that price opens, trades all the way down to the optimal trade at the 62% level right here. I've not put the levels because I don't want too much accumulations of data on the chart, but you can see that price trades really close to the low inside of this order block, right? So it's giving you the cheapest price possible, realistically, right? That's what the optimal trade will give you. So you can buy that over here, and then you're looking at the Asia buy side liquidity as your draw on liquidity, and you can look for this low here, not the previous day's low, because price opens inside of a deep discount, right? So I'm not really looking at the expansion that price is going to take out this previous day's high, right? This is another concept of mine. This is something which is maybe across the series of videos that I'll do, you're going to hear me talk more about when I'm not going to be expecting the previous day's high to be run or the previous day's low to be run, right? So this is also another case, but we're not going to talk about that here. But you can see the trade here. Price opens, runs the sell side, displacement, fair value gap, retracement, the optimal trade entry, long Asia buy side liquidity. Simple as that, right? Okay. All right, boys. So this is our third and last example for the video. You can see here, price opens at the midnight, runs the Asia buy side liquidity, fails to take out the previous day's buy side liquidity, which is fine, right? So once we see this displacement, leaving behind this imbalance right here, let me take off this Fibonacci so you can see this imbalance that was created with the displacement in London, right? Price returns back into the optimal trade entry. And I want you to note something on the chart, right? It didn't just return to the optimal trade entry, because if you were looking to sell on the optimal trade entry, you'll be selling at this price point here. But we had this midnight opening price. Notice the importance of that midnight opening price. Notice how price trades into it, fails to close above it. That was what set the stage. So anyone who would have been selling short here, right, and saw price displays lower, and this expansion here again might be terrified, especially seeing as how deep we retraced into the rejection block here, this bearish rejection block. They'll be very terrified with this movement. But if you already understood that price was bearish, was going to see some kind of sell side delivery, you missed this sell in London, and you see the displacement left behind, right? And you see price returns back into it, you can sell that market short, right? At the midnight opening price. You can sell it short here, but then your stop is still going to have to be above here. So you're not going to be stopped out of the trade regardless. So you should have no problem. But if you want that, you know, precision in price, you can wait to sell it at the midnight opening price right there. And then you can get the drop, which happened exactly in the 7 o'clock hour in the New York session, right? So that is your optimal trade entry sell here. And then you can see the trade, which is here. You see the importance of high. I tell you that you should want your stop to be at the high of day, because you can see these sort of deep retractions all the way that deep into the rejection block, right? So you can sell the market short, and then you're looking at the current low of day, which is over here. You're not looking at the previous low of previous day sell side liquidity for the draw, because price opened price open in a deep premium, so it was not, you're not going to see that large expansion down for that low, right? So that's something you want to take note of as well. So yeah, these are the 3 examples. You can go into your chart and look at just the last previous days. You can look at the charts between the euro and the pound and see all these sell examples where price trades above the buy side liquidity in the Asia or below the sell side liquidity in Asia, displaces, leaves behind a fair value gap. You want to be seeing when price returns into the fair value gap, how does it respond? Does it trade through it and stop you out? Does it respect it and expand and take out some kind of buy side liquidity pool? You understand? So you want to be gathering the data on these, and then once you go through quite a number of examples, you're going to see it happen over and over again. Every single week there is some example regarding to the trade play out, right? Yeah, I hope this video was insightful. Good luck and good trading.